Good afternoon, distinguished guests, and welcome to today's webinar. My name is Marin Zandason. It is my pleasure on behalf of TMA to present you our fifth event of TMA ESG Series under the theme of CVC for SDGs, Innovation for Sustainability, how corporate impact venturing can support the SDGs. First of all, I would like to invite Ms. Prescriptive Kamjon, Senior Manager, Thailand Management Association, to give us the welcome speech. Please welcome.
สวัสดีค่ะ Good afternoon everyone. I'm Prescriptive Kamjon. On behalf of TMA Thailand Management Association, it's my pleasure to welcome you on board to our fifth activity, ESG Series, which organized by TMA in collaboration with AWR Wright. The topic today is about innovation for sustainability by CVC framework. With all the experience of our guest speaker, I believe that the section today is very interesting and can be inspire some innovative energy to your attention. I would like to say thank you to our speaker who kindly spare their valuable time for us today, and as well as AWR Wright who working together with us to make this series happen. And many thanks for everyone who joining us today. I hope the discussion and informative sharing can apply effectively to enrich your organization value for sustainable development. As the section today is very short, it's only an hour. If you would like to explore more experience in ESG, deeply knowledge sharing and both strategy and best practice, you can attend our full day as the Sustainability Forum on this coming October 28th. Please save your days, and we're looking forward to see you again on October 28th. For today, please enjoy. Thank you so much. สวัสดีค่ะ
Thank you very much, Prescriptive, for the warm welcoming. Today we have an amazing panel on innovation for sustainability, how corporate impact venturing can support the SDGs. Well, we're talking about the big trends we need to focus which could impact your business. Before we get started, I will go over 4 field items so you know how to participate in today's event. If you're listening in using your computer speaker system, by default, we recommend it to use in-ear headphone for high-resolution audio. You will have the opportunity to communicate and ask some questions with our speaker by typing your questions into the Q&A function on your right-hand side on the screen anytime during the presentation and panel discussion. We will collect and address them during the Q&A session. The format of the event will be a special presentation from each speaker, and then the second half of our time, we will dive into panel discussion. Now, without any further delay, I would like to introduce first speaker, who will give us a special presentation. Please join me welcome Mr. Brad Danick, Managing Director, Innovation for Sustainability, AWR Wright. Please welcome.
Thank you, Khun Kwan, and thank you to Thailand Management Association for another opportunity to speak with TMA members again today. My presentation on behalf of AWR Wright will really focus on the larger picture of the issues around sustainability and what are some of the technologies and solutions that we see being invested in today. And then my panelists and co-presenters will provide a different perspective on approaches to venturing CVC to solve some of these issues. So very briefly, we'll give an overview of AWR Lloyd. So we've been in business for 21 years, 500 assignments, predominantly private sector, but some public sector, strategy consulting, project advisory, M&A, and corporate finance. One of the top 10 ranked management consulting firms in Asia Pacific, offices in Jakarta, Ho Chi Minh City, our main office here in Bangkok and Mumbai. And a key theme around that we focus on for our business is innovation for sustainability, that we think that's where value will be created over the next coming decades. So I'll start the presentation zooming out in terms of where we've been, which has been over the last 4 decades, we've seen substantial progress. World GDP per capita has risen. We've seen the middle class increase, literacy rates increase. In addition, the percentage of the population living in extreme poverty has declined significantly. As well, mortality rates have declined and life expectancy has gone up. all of those are great trends that we should collectively embrace. At the same time, this development has taken its toll on the planet. We see this in climate change, over $200 billion worth of damage last year. The WHO conservatively estimates that there will be an additional 250,000 additional annual deaths from climate change. When it comes to resource use and waste, resource extraction and processing causes over 90% of biodiversity loss and water stress and half of global climate change impacts. When we look at water scarcity, still today there are 2 billion people living in countries under high water stress. Biodiversity loss, we're seeing 150 to 200 species of plant, insect, bird, and mammals go extinct every 24 hours, which is 1,000 times the rate of natural rate of extinction. And by one estimate, biodiversity loss could reduce GDP globally by 18% by 2050. Importantly, we are well past the carrying capacity of the Earth. 1.6 Earth, 1.7 is about what we are consuming today. And that's projected to go up to 3 times by 2050. But it's not just the environmental issues that there's imbalance, it's also inequality, which is pervasive. So wealth and income inequality, where you have the average income of the richest 10%, 9x that of the poorest 10%. And in 2018, you had 26 people owning the same amount of wealth as nearly 4 billion of the poorest. Child and forced labor still continues. 1 in 10 children worldwide engaged in child labor, and more than half of those are exposed to hazardous work. And there are nearly 30 million people in modern day slavery today. Access to resources, again, some of the nearly 2 billion, that number is closer to 1.6, 1.5 billion today, that lack access to electricity. 40% of the world's population do not have access to clean water, and 1.7 billion people remain unbanked. And then gender inequality. So according to World Economic Forum, over 100 years to close the gender gap, and less than 10% of countries give women equal legal work rights. Couldn't agree more with this particular quote, that one reason global poverty has been so intractable is that it remains largely out of sight. Okay, that all said, there are some real blueprints, compass, and guides collectively for business and governments. So Sustainable Development Goals, the Vision 2050, and the Paris Agreement are 3 North Stars, if you will. So one, the UN Sustainable Development Goals, 169 targets. There's clear ambition, clear metrics that corporates can use as guides to commit to sustainable development. Focus there is 2030. Then the World Business Council for Sustainable Development, the Vision 2050, different versions of this document have been around for 10 years or so. But here it's really a vision where 9 billion people are able to live well within the planetary boundaries. And this document really focuses on the transformation that's required across industries to get there. And then of course the Paris Agreement, giving us both short, medium and long-term goals to align with a well below 2-degree trajectory. So that's all good that we have those guides, but is capital really moving to the innovative solutions that we need? And over the last few years, we've seen a lot of progress. So we've seen 10x from just 2015, and in clear indications that we're at a $1 trillion+ market with an impact. So how does this break down in terms of these impact investments? Looking at just 2019, the last year that we have full information for. Renewable energy, healthcare, climate, and social infrastructure are some of the key sectors. And then when we look at it by Sustainable Development Goals, we have innovation, infrastructure, renewable energy, climate, and good health. So for us as a firm, when we look at all these different trends and where to focus on, certainly climate change is where there's a lot of innovation. These are some of the main sources, if you will, emissions activities. And they're also the main sources of innovation across power, transport, ag, buildings, industry, other energy. Within circular economy, the opportunities here could not be more pervasive. There's less than 10% of businesses that fully incorporate circular economy models. Just on the biocircular economy, it's estimated there's nearly $8 trillion of economic opportunity by 2030. So this is as well an area of real focus to the region. And then lastly is another theme is inclusion. So there's still, as mentioned in the previous slide, there are still too many people that lack access to basic resources that would give them better opportunities and improve their lives. So those are some of the three thematic areas we pay attention to. One of the most keys for us is climate tech. And this is a space that's just changing very rapidly. So we've seen investment quadruple from 2015 to 2020. In 2020, it was $20 billion. In the first half of this year, it's already 16 and on target for $40 billion in VC climate tech investments. Corporations have participated in 45% of those deals. So obviously CVCs and corporate investment is gaining traction. Again, a quote we couldn't agree more with from Tim Cook regarding executives must have an innovation strategy. And on the right, there are some examples of different corporate venture capital units that have a focus on climate. So now I want to dig in a little bit more into specific examples in climate change. So on the left here, overviews, we have key investment trends. So over 300 deals last year, average size of roughly $55 million, and 40% of that was going into mobility and transport. And below you see some names, those highlighted, are in bold rather, are corporate venture capital units. On the right now, I want to go over some of the deals that we've seen that we are paying attention to. So one in agriculture is plant-based proteins. So you have Eat Just, that's a Singaporean company, recently $270 million raise. We have Beyond Meat there as an example. That was one of the more successful IPOs in US history, recent US history, I should say. Sustainable agriculture, kind of two themes here. One is indoor and vertical agriculture. Another is different solutions like Pivot Bio that's looking to replace synthetic fertilizer. They recently raised over 400 million, and Temasek was part of that investment. As well, then we have agritech. So here it's a lot around using drones, remote sensing, AI to basically identify root disease in crops that can save valuable time in identifying when the disease is taking root. But then also other forms of sustainable intensification, so we can produce more with less land. And then in energy, we see a lot around energy storage. So you've got Form Energy that recently raised 200 in a Series D from ArcelorMittal, ENI, and Temasek. Power grid, here there's a number of solutions that are really almost apps to help consumers and businesses connect to the grid, and as like a prosumer model where they're able to monetize that. Weave Grid is an example that's focused on EV fleets being connected to the grid for grid management. Then alternative energy, there's the obvious around solar and wind, but Lilac Solutions is one that raised almost 200 million in a Series A because of a new technology for lithium ion extraction. And there's a few others in there that are, as well, are quite interesting. Within transport, electric vehicles gets most of the attention, but Van Moof is an example from Netherlands that raised over 100 million for electric bicycles. Zero emission fuels, so we have examples of Zero Aviation that is electric flights, short haul flights, and then Fulcrum Bioenergy. The market to decarbonize sustainable aviation fuel is significant. And then within industry, you're seeing a lot around cement, low carbon steel, carbon utilization, et cetera. So now I want to give another example from circular economy. Key investment trends there is that you're seeing financial institutions, governments, and corporates all active in this space. Again, very little of the global economy has a circular economy model, but it must in order for us to reach our targets by 2050. Some examples there within chemicals. So Solugen is a company that recently raised funding. Alternative materials, Fiber is another example. And then sustainable apparel, we have Allbirds that's pre-IPO, recently raised $100 million. The focus there is alternative materials in apparel and in particular shoes. For food waste, we have different technologies, again, leveraging AI and others to eliminate food waste at source. We have edible food coding, so Appeal has raised, I think, nearly $300 million. And then food rescue. So this is for consumers, right, to actually be able to have an option to buy and purchase nearly expired foods, et cetera, that are, again, focused on reducing food waste. When it comes to recycling, we see a lot around e-waste, within batteries. Again, this is a trend as we go to shifting our energy system to one that relies heavily on battery storage. Both of these firms have raised north of $50 million in early stage funding rounds. And then consumer products, some of these are around recycling materials into new uses and products. Our last one that we look at is inclusion. So more deals here. Again, ticket sizes between $30 to $50 million. Some select key investors there on the left. Again, bolded corporate VC units. Education has been a key source. Again, this is the idea of expanding education opportunities, digital inclusion, if you will. Health, so here we've seen companies that are really focused on telehealth. So within telehealth, you have Doctor Anywhere that raised nearly 100 million. Zipline is drones that raised nearly 500 million that focuses on getting medical supplies into areas that urgently need it. And Spring Health, 300 million for mental well-being. Then when it comes to financial, this is an area that's getting the most growth in the region. A number of different firms here really focused on financial inclusion services. Just have a couple more slides here to briefly go over. So how do we see this impacting corporations? So there's all this VC money. Corporates are involved in some, but not all of these deals. But the main kind of thematic idea here is that sustainability is now central to corporate strategy. If we look back decades ago, it was CSR. Then we've gotten into this corporate sustainability management, right? Answering all the questionnaires well, disclosing in sustainability reports how we're performing. But the future belongs to companies that really understand that stakeholders expect you to be an active participant in solving these issues. So one way to do that is certainly through corporate venture capital and venturing and investing in impact funds. There's also a twist on that, which is corporate impact venturing, which is to more deliberately include impact metrics into your investments. And very lastly, how we work with companies is through transaction advisory, so supporting innovative companies that are providing solutions to find different sources of funding. Innovation labs in corporate venture capital, so working with companies in the region and the United Nations on setting up innovation labs. And then lastly is venturing to support new companies that are creating solutions. This one in particular, Syngenera, around nature-based solutions. With that, I'd like to thank you for your time, and we'll hand over to the next speaker. Thank you.
Thank you very much, Mr. Brad, for an interesting talk. And for our second speaker, Mr. Steve Bragowski, founding partner of Wright Partners. Please welcome.
Thank you, Brad, for setting up a great presentation on both the need for innovation around sustainability and a few of the different approaches. So nice to meet you. My name is Eve. I'm a founding partner of Wright Partners, which focuses on venture building, which I will talk about now, and how we use venture building specifically in my examples today around agriculture to help corporates build investable ventures. So we are working with AWR Lloyds actually around the venture building aspect in developing different kind of solutions. So a little bit of introduction about us. We are a group of entrepreneurs that have done various ventures across the region, and specifically mostly ventures in the wild, but also corporate ventures together with corporates as well. And what we've realized over time is that there is a lot of problems that cannot be solved solely by what we call ventures in the wild, by the mythological two entrepreneurs getting together in their house garage and trying to solve world's problems. This is specifically true when it comes to the kind of sustainability issues that we are trying to solve. So we are operating largely in Indonesia and Singapore, and have some work in Malaysia, and I'm working with AWR Lloyd specifically for the Thailand market and beyond, actually. So what is corporate venturing when it comes, and what are some great examples? So corporate venturing is the idea that corporates can develop startups. And when we talk about startups, and we'll define a bit later what do we mean by investable, specifically investable startups, but what we see both in the region and beyond is that there's been quite significant activity already around this space. So True Money obviously just announced a raise at a $1.5 billion valuation last week from Alibaba and whatnot, obviously homegrown in Thailand. OVO is another great example, as it was just completely, or not completely, but the Lippo Group and Tokopedia, Lippo being one of the larger conglomerates in Indonesia, and Tokopedia, one of the larger startups, one of the largest decacorp in Indonesia, just divested away from OVO, and Grab has bought 90% of OVO. They had a significant investment before. But what we see beyond that, newer players like Legit, which is riding the cloud kitchen trend that is very, very popular right now. And it started by Smaya, an Indonesian restaurant player that is looking to actually get into this space. But what we see also is that it happens around the world, whether it's Ping An or Rabobank, and many, many others are looking to develop specific ventures, right, as such. What do we mean by ventures? Now, and why is that important? The idea, when we talk about ventures, we specifically speak about investable ventures. What do we mean by investable ventures? Those are ventures that can be invested by a VC. That has certain kind of implications from how the venture is constructed. And it normally means that governance and equity are aligned to allow for entrepreneurs to actually lead the venture forward and get VC funds. But it also means, being that it's a corporate, that it allows the corporate to leverage its significant corporate assets. So OVO, for example, as we mentioned, and actually True Money is another great example, have both benefited from the large infrastructure that CP Group and Lippo Group had when they started, to leapfrog and to actually grow much faster than what a venture in the wild would grow. And finally, and this is why it's so important, where we look at specifically sustainability for innovation, are we solving market problems? Often what we see, and specifically I think Brad mentioned greatly how the journey went from CSR to innovation for sustainability. Partly why that journey went that way is because CSR has had a very hard time solving market problems. They tried for a long, long time, and are still trying to solve real problems, but are not market problems that the market can save. And therefore, the money doesn't always allow for the right revenues, the right return. Whereas if you're doing corporate venture building, you're focusing on three things. One is leveraging your corporate assets. Two, solving a market problem like many of the ones that were mentioned before by Brad in the examples. And ultimately are building an investable business. Now, if you do that, research suggests that your success rate and valuation and the exit would be much higher than what we call a venture in the wild, a venture that does not have a corporate backing. So if you're a corporate and you want to start looking at the kind of innovation for sustainability, you have a few options. And corporate venture building, specifically, for example, with a company like us, Wright Partners, why does that make sense? So the few options that you have is obviously starting internally, and many companies have started internally to trying to create innovation. The problem with that approach that we've seen is that the entrepreneurial mindset is not always the same as the corporate mindset. And many of you in the audience that are family owners and whatnot have probably realized the difficulties is trying to give some of the responsibilities and aspirations to your team, because they don't have the same drive, the same passion, the same vision as you have for your own business. And so what we see often, if you try to solely go and do this internally, especially when you're trying to solve problems that are not exactly at your core, it becomes difficult. And the success is not always as promised. The second try that companies have tried for some time are the incubators or accelerators. Great companies like Plug and Play and Rise and others that are bringing ventures to you as businesses and are basically saying, hey, can you try them out and build a pilot? Those are great ways to learn about what innovations are happening in the market, but we often see that they do not allow you to align your strategic benefit directly with them. And they're sometimes difficult to work with as your other investors make it not so easy for the corporate investors to come in. Thirdly, it's CVCs, which we'll talk about a bit later, so I won't spend time here. And lastly, it's consulting like venture builds, which are the companies that actually say, okay, pay us a hefty fee and we're going to build for you. We don't believe that consulting works, and we'll show you in the next page as to why. So what is it about the ventures in the wild? When you hear about unicorn, where do they start? Well, unicorns often started as very, very small company, specifically a company that spent about $2 million for its first 16 to 18 months of their life. And that is quite important because whether you're a small business or a big business, it actually doesn't make sense for you to spend more than the $2 million over the period of 16 to 18 months to test out an idea, especially if you're looking to tackle some of the bigger problems around sustainability and innovation and whatnot. So the way to do it, and this is what we try to do at Wright Partners, is actually to cap the total spend, including as a third party fees, for example, to us, at this $1.8 to $2 million. And what's terribly important is to give them the upside in terms of equity. That is slightly different approach than what we mentioned before in terms of the consultancies, but it actually mirrors much better what a venture in the wild does. So all those companies that were mentioned earlier by Brad, or I think, not knowing every single one of them, but the large majority of them have started in this way. Give a bit of money, give a portion of equity that aligns the incentives, similarly to how some of you have started your own businesses, and see the founders grow and allow for VC funds to come in. As a note, from experience, this $1.8 to $2 million have shown to be much less in Southeast Asia compared to the rest of the world. So much less is actually needed. Now, we talked about the other approaches to say, well, why go through the trouble of venture build? Why not just do a CVC and invest? Well, what we've seen again is that there is a bit of a difference both in terms of return and in terms of strategy when you look at venture building versus investing. And I think later there'll be some that will speak with you about venture investing, and we'll have some nice discussion based on that. But basically what we see is this. If you leverage your own assets in a way that is difficult to do if you're just investing, then the chances of success would obviously be higher because you have assets that will make the venture be more successful. But more importantly, investing the same amount in an existing startup will normally yield you a much lower equity stake, which will both impact your returns, but also your ability to strategize later with the venture. Now, we don't say you do one or the other, but we do say that you consider both approaches and see for which problem it makes sense to do which. Now, so what does it mean in practice? The other thing that I think is important, and again, many of you will know this as you run your businesses, when we think about venture in the wilds and when you think about the Lazadas of the world or the e-commerce and whatnot, you often think about, oh, it's digital. But what we learn time and time again, and what has been shown by Brad's presentation a bit earlier, is that the problems to solve are actually quite physical in nature. So just coming out with a digital solution will not make plastic waste go away or climate change to stop or whatnot. And this is why it's quite important when you are doing this, you actually understand the both offline and online nature of the business. What is even more important is that as you leverage your assets, that's, you know, you leverage your offline assets and you allow them actually to go digital. These are two examples of ventures that we built. In both cases, both are in agriculture. So one of the areas that will be quite instrumental in the next 10, 20 years in how we deal with climate change and food security and whatnot. But more importantly, both have a strong measure of both doing offline work as well as online work. Finally, just giving you an example of how venture building works, right? So when you start on venture building, and this is Agriaco, one of the, you know, this is Agriaco, one of the ventures that was shown earlier, and the one that focuses on distribution of inputs to farmers. The basic idea is this: like any other venture, when you start and you're thinking about venture build, you identify the problem. So the first idea is, in the first month, you have a very, very strong problem statement that you're trying to solve. In the second month, you then start looking at, okay, I know the problem statements, I conduct the field research, I try to see, one, if my problem statement is right, and two, and more importantly, do I have an idea of the right solution? This is also where you as companies would have the assets to leverage. Then after we do that, you start off with developing that solution and going back to your potential customers to actually testing it out. Up until now, this doesn't differ so much from how you've actually built and ran your own businesses. What different is, or the way to do it as such, is to do it in a very, very fast way to try and get really, really immediate response. And this is where the vision and mindset and all the stuff that we talked about before is quite important. As we go through, the important then is to run this business forward, making sure you're starting in your revenue targets and your commercial targets as well. So thank you very much. We'll now hear from the next speaker.
Thank you very much, Mr. Steve Bragovsky, for interesting talk and sharing insights of data that will be advantageous to improve our business in the future. And next speaker who will share us deeper information from this perspective of private equity fund focused on SDGs oriented business. Please welcome Mr. David Karipur, funding partner of SDGs and director of SDGs Near Future Lab. Please welcome.
Good afternoon, everybody. My name is David Gallol, and I want to thank Ziv and Brad actually for the really good presentations, excellent presentations before that really sort of broke down where the market approach is going and some of the different models where corporates can really sort of engage with innovation and sustainability at the same time. I'm going to talk a little bit slightly different, really around the environment. And I'll back that up just to show you why I'm going in this direction. Just give you a bit of a background about me. I'm Canadian. I'm in Bangkok, or just south of Bangkok right now. But I'm Canadian, but I spent most of my corporate finance life in Europe. So I worked in Europe, in Germany, in France, in Switzerland. Corporate finance, basically a lot of McKinsey style of work, mergers and acquisitions. But then I also was an internet entrepreneur. I had 3 internet startups. 1 failed miserably, but 2 were acquired. And the money ended up in Switzerland, so I ended up in Switzerland. And I was looking at academia, I was looking at the corporate world, and I was looking at the entrepreneurial innovation world, but I was also interested in development. So I joined the United Nations at that time. And I worked in Geneva, Switzerland, but I also came out, I've been with UNDP at the regional center here in Bangkok, running their innovation and their impact investment portfolios. And I left them about 2 years ago. And this is sort of what I do right now. I've been running a research lab at MIT and Carnegie Mellon in the US around social technology. This is a forward-looking on a very advanced technologies. We started this year's research commission budget at about 160 million US. We will end this year at just under 300 million US that we are spending on research. I also work with a lot of universities, NTU in Singapore, Chula, AIT here in Thailand. and we do some research, and I do a little bit of lecturing with them. But what's important here that I've founded with 2 other founders, one in Berlin and the other in Sydney, Australia, SDGs. It's a structured fund structure in Singapore. We talk about research. We have a research area, the Near Future Labs. We have a venture area, and we have a fund structure area where we are actually structuring funds. And what we focus on
Recording
is impact,
in progress.
so positive impact, but also we're focusing on very advanced deep technologies and how the two come together. We have SDG in our name, so it's clearly that we're really focusing on the positive impact and how some of these new technologies can create positive impact. So when we start to look at the reality, and we're very forward-looking, so we're very future-looking because of the deep technologies that we look at and invest in. We know smaller funds managed by younger fund managers are outperforming larger funds. So we know that the VC markets are very successful, but they are shifting. We also know that funds investing in earlier stage companies are outperforming later stage companies. So we know that early stage startups, the innovation cycle is becoming shorter and shorter and shorter at this current time. So these are things we know. This is all based on evidence, and you see the sources below. We also know that when we start to look at sustainable investment, that the impact investment era has really been boosted by COVID. This is really being driven by the increased awareness around climate change, but also the environmental denigration, the unequal access to healthcare. So the population, investors and consumers and business owners are starting to realize that there are some major challenges that need to be addressed. We also know that PE and VC funds investing more in emerging markets. Asia, and specifically Southeast Asia, is really becoming a focus for very advanced technologies, the investments in them, and also the way that impact investment or impact, positive impact is really starting to come together. Consumers, investors are really seeking and really driving this change, more transparency, social economic accountability. And the image there you show from privately managed and publicly managed funds, impact on purpose, impact intended, is really starting to grow. And I believe this, so if you look at the data here, is well over $2 trillion are being invested in so-called positive funding, positive investment, green bonds, climate, a lot of these areas. So we know that the market is also moving. And one thing that we really look towards, this comes out of a lot of our research, but also research, this is research based from Harvard, that when you look at this mutation of capitalism, capitalism is shifting towards more social economic rules, sort of a hybrid of economic and social logic. So we're starting to see this shift where governments was really focusing on GDP, really toward the market mechanism, letting the markets take over that function of running the economy, but again, focus on GDP. We're starting to see that shift, that sort of well-being for all. And that is really being driven by consumer sentiment that want to really purchase sustainable products and services. We're seeing that from investors that want to invest in sustainable companies. We're also seeing that from governments that are really coming up with a new policy, the legislative matrix that is really sort of not forcing people to move in this area, but incentivizing, helping companies move into sustainability. So we see everything moving in the positive direction, but a lot of this rich investment is really going to see more returns in balanced economies. That's why we're not seeing that for example, the unicorns being spread equally around the world. We're seeing a clump of unicorns coming out of Europe and the US and less coming out of Asia at the moment. So we're starting to see this now starting to challenge some of these concepts. And then we look at innovation in itself, what is sustainable innovation and the way that's breaking down. Sustainable innovation does help corporations. We know that. It opens up boundaries, it promotes collaboration, breaking down of silos, really sort of new fuel for the innovation process. But sustainability comes in 3 classes. Sustainability relevant innovation, which is sort of a positive side effect. You do something, you have a new product, new service, and perhaps it does create positive impact. Or your sustainability informed innovation. That means that you think about sustainability as you're doing your innovation within your product and service. and it's one of the inputs, or it becomes one of your core principles. And we've seen companies move in this direction, because it becomes one of the core principles, and sustainability is really starting to drive their innovation. A lot of that's coming out of consumer pressure, some of it out of investment pressure. But at the organization level, when you start to look at sustainable innovation, it is more disruptive, but it's really fueled by better rationale. It's more strategic. It really does help your forward-looking strategic plan when you include sustainability into your innovation processes. It is more collaborative because you are breaking down silos. You're often bringing teams together that don't often work together. It does support the next generation of staff, consumer, and investor sentiment. And you have this external focus, the 3 Ps, planet, prosperity, people, ESG, SDGs, all the labels. But what it really does drive is the internal focus, business continuity, and risk management. And this is the key. Sustainability is good, but sustainability for your corporation or your company is better. And that's what you want to drive. You really do want to drive this business continuity. So we look at sustainability, especially in innovation, on 2 sides. Sustainability is good for the planet, good for the people, but it's also good for the company. That means that company is going to have a much stronger future if we go into it. This is key when we start to look at the environment that we're looking at. And this is coming straight out of the research. This is just literature that really shows the difference between innovation and invention. Innovation is slightly twisting things, making things slightly better, where innovation is creating brand new things. And we saw this crossover at the time that the internet was becoming very popular. The ease to share knowledge, the ease to share ideas, the ease to copy ideas, the ease to steal ideas really start to happen around when the internet become sort of cost effective for most economies. And we saw this big shift happening. But what we're starting to see now is the reversal of that. It really is around this shift as deep technologies start to come into play. We're starting to see brand new products, brand new services, and brand new markets being created for brand new consumers. So we're starting to see a real shift. So that is sort of breaking down the VC model a little bit. We're starting to see new models to come up. And obviously, we see a lot of positive pressure, government, civic society, corporates, investors, towards positive impact. So we're starting to see this shift. And it comes really in 2 forms when you look at this next: strategic. So you have this advancing current business models. That's what you all want to do. You also want to enable, you want to complement the current business model with new models. You want to become more fit for purpose. And you're seeking new markets, and you're definitely seeking new talent. So when you talk about future proofing, but we also see it from financial, allowing the explanation of new models. So you really start to outsourcing innovation, either to research institutes like ours, or you talk to other investors or scouts. Convergence, active engagement support, outsourcing market maker role. Corporate CVC, we look at corporate venturing. A big part of corporate venturing is that corporate can become the market maker. It helps those that it's investing in enter into the market through its networks and really sort of excel in that market, which is lower their failure rates, exactly what Zeke was talking about. So this is really important. And obviously the passive side, when you talk about providing financial returns, outsourcing scouting. So you're looking at deal development. You're driving a pipeline and looking in this area. And this is really being driven by the way that we look at the innovation drivers. Consumer-driven innovation, which is starting to fade, being replaced by data-driven innovation. And that's what we're seeing right now. Data analytics, advanced algorithm, LNR class algorithms. We're seeing a lot of these new things are really coming up, and it is shifting towards green. So we are seeing that the data is actually shifting. The sentiment is shifting towards sustainable impact, positive impact. And then what's coming right now, as we start to see this, is sort of tech-driven innovation with all the new technologies coming out. And we have to look at, we understand right now, the internet, a relatively simple, unsophisticated technology, had huge impacts on economies globally, breaking down sectors, creating brand new sectors. One technology, relatively not very sophisticated. Now we're going into the future where we have 5 or 6 clusters of very advanced technologies, robotic and automation. We've got genomics, we've got algorithms and AI, and all the variants of artificial intelligence. We have clean tech and climate tech and all the variants of that coming out as well. So we have a lot of these great and brand new. So we're seeing this shift from innovation towards invention, really going to that extreme. So we start to look at, and it's really around how do we phase this in? How do we control that? And that's a lot of what we do. So when we get into the way that we look at it, it's really a no trade-off. From the financial side, you've got prescriptive, pervasive technologies. There's a list of them. We're looking for startups and organizations, companies, corporations that are really driving towards new operating models, really driving towards new market structures, and really driving towards new behavioral change. These are sort of the areas that we do when we're evaluating the companies that we partner with for co-investment, for example, the partners that we're investing with their funds, and also the startups that we're looking at. And then from a strategic side, really looking at the pressure for consumers and investors, the responsible deployment of a lot of this advanced technology. How do we make sure that it's ethically, AI ethics, a big topic right now, data privacy, a big topic right now. How do we ensure this? Responsible scaling up, progressive policy innovation, working together. When we look at robotics, for example, but the introduction of robotics will have a real downward pressure on workforce. What do we do with people there? So the responsible scaling up of robotics and automation, and obviously raising trust. Trust is at an all-time low across the board. So how do we raise trust? Trust with consumers, trust with policymakers, trust with business and innovators, and trust with investors. How do we sort of raise that up? And that's right across corporates and the SMEs. So the whole class that we're looking at. And one of the approaches, this is just simply one, but one of the approaches that we look at is VC as a service. So when we start to break down venture capital as a service, and obviously we are very looking at the positive impact of venture capital. So we're looking to create positive impact, higher than market returns, and our focus is a lot on deep technology. It really is around working with our corporate sponsors, working with corporate partners, mandate strategy, innovation, the investment focus. Really trying to figure out what does their future look like and start to go into that area, not haphazardly, really evidence-based and based on a lot of the research. Set up the operation models in the government. So how do you actually maintain that? How do you enforce that you are managing your risk when we start to look at a lot of brand new and potentially unproven technology? Deal flow and diligence, we look at how do you vet it, obviously with the research that gives us a lot of insight into the validity of the research of the technology. If it's functional, will it actually work? Is it investable? Is it protected from the IP perspective? Learning and sector points of view. So we actually work with a lot of the different networks, a lot of the accelerators, a lot of the incubators to get their perspective on where this is going. So it's not a very narrow focus. We're getting a very broad sort of focus and understanding. Obviously, the investment support through the structure, the portfolio management. We use a Theta portfolio management system. That's in another slide I won't go into now. You can Google it. But it's a very interesting, sort of a very broad perspective on, we really focus on developing not only the startup and technology, but the founders and the staff as well. And then we look at the integration, and we work a lot in post-acceleration. We do not take and invest in startups out of incubators, more at acceleration or post-acceleration phase. So we don't focus too much on startups, we focus on scale-ups. We focus on those companies that have the ability and the means and the talent to go across borders, to go regional, to go global. This is sort of the area that we focus in. Provides an optimal mix of capital and business value, complementing existing new business in-house VC capabilities. Really is around convergence and the lateral opportunities. So there's a lot of areas, especially when you're looking into the new market development, new business models, new market creation that are not so evident today that are becoming more evident in 2 to 3 years. So we are actually, through the research, looking at leveraging a lot of these opportunities. And you decentralize your R&D. Sometimes your R&D becomes very focused, especially with a lot of new technologies coming out. So you really do have to go out and do this. So pre-screen, de-risk pipeline of late-stage startups for direct co-investment. And this is sort of the area that when we're working with corporate partners doing this, you will get a copy of the slide so you can look into detail this. This is just the fund that we're structuring right now. is going to be anchored and structured out of Singapore and Luxembourg, $100 million climate technology fund. We have a lot of interest from corporates in this. We do have a lot of interest from development agencies as well in this. And we are getting a lot of positive response from Singapore to break this out as well. And so that gives you a bit of an idea of some of the areas that we are working into and doing that across. And I believe that's it. Thank you very much. And I'll pass on to the next presenter.
Thank you very much, Mr. Caribou, for an insightful talk. And now we are moving on to our last presenter, Mr. Prem P.P. Gitti Ratakan, Investment Director of PTT Expresso. Please welcome.
Yeah. Hi to everyone, and thanks TMA for organizing this event. I think the audience should have understand the landscape and what's going on in the industry. So what I'd like to share with you today, maybe it's a perspective from a corporate who trying to execute this strategy, investing and combine the SDG and ESG into the business goal. I just want to start with this graph. This is what energy industry was talking about. So this graph was actually from 2019. Some may see it before, some may not. But I think not many people believe about the peak oil back then, up until the COVID hit in the same year. And it kind of show or reveal what the future look like if there's no need on the oil. And not long time after that, we also see the news like coverage on the Bloomberg Business Week that on the mobility side, the number of cars will reduce as well, notwithstanding the number of population that's growing. So we stop a bit and think about like what actually is happening. And we realize it's not about the demand that is become less and less, but it seems like people are more responsible about how they live their life. So, and the other trend that's coming out now is the pace of innovation that deliver the economically viable solution, so people can have a choices to live more responsibly in this world. At PTT, though we are not 100 years company, we start to think about how we can grow and survive in this trend. And recently we just released a new vision of the company by looking at the customers. We set them as the compass of how the company will grow from now on. And we find a way to provide them with the solution and at the same time serve their need on the sustainability side. So we will adjust the portfolio to serve the way of life of the newer generation of the world. And at the same time, we will look into the solution that can serve the population better. And it means it will meet the double bottom line. One is a profit, and the second one is the impact on the carbon footprint as well. So on the future energy side, we will shift into the new energy, and we also expand into life science, mobility, and other businesses, taking into account both the growth, the profitability, and the sustainability. And we also set up a unit called Expresso to explore into the new territories that the new innovation will open up the opportunities for the business. We embedded ESG and SDG into the corporate plan and business goal. It's not because we want to have a good brand image, but first, ESG kind of help us in terms of the risk management. In the past, we only consider economic, but now with the impact investor, with the demand from the pension fund and large financier, and also the right to operate from the social and environmental perspective, it requires all the corporates to think about the impact, not just the money that they can make from the business. And recently, we just set up how we evaluate a project. So we add the carbon price into the project evaluation and also set the clear goal in terms of the greenhouse gas emission in the 2020 to the 2065. And on the access to the innovation outside, within the innovation team, so we invest into the venture capital fund, and we invest directly into the innovation company in the area of the sustainability and climate tech. And we also partner with multiple players in the sector, for example, Elemental Accelerator, like Plug and Play, and some other community as well. First, to access to what's going on in the market out there. Second, to access to the right manpower and talents, to work with them, to learn from them, and to think about like what would happen in the future world. And from the knowledge or insight that we gather, we start to implement these into the corporate through two tools. One is a venture partner, and the other one is a venture builder. On the venture partner side, we focus more on the sustaining innovation. The main purpose is for productivity improvement. And on the venture builder side, we would like to capture the new S-curve opportunity by looking at the intersection of the innovation trend that's crossover. On the venture builder, the main mindset is around design thinking, understand the customers. We adjust the process, we adjust the mindset on both the working team and also the decision maker, and also set up the criteria to start and use the different judgment method because this is a new thing to everyone, not the top executive who know best, not the worker who know best. So we try to collect data, we try to collect facts, and try to make decisions all together. And by de-risking this, the size of investment that are put into this type of venture investment is bigger and bigger. I can give you two set of examples that we are doing. The first one is around the crossover between the electrification by renewable energy and also the maturity of the AI and blockchain technology. Through this lens, we see opportunities around energy management, how to manage the energy flow, how to manage the renewables, and also how to control the pricing, like to create a market mechanism so the energy will be used properly. And through that, we create a blockchain trading platform where we can track and trace all the energy produced and consumed in a small area first. And we pick Wistech in Rayong as a sample case. And now we can start trading algorithm, and we expand this idea into one of the industrial estate. We also send our people to work with the global partners on the energy blockchain. And now we are creating another venture. We call it React, which is the platform for the RE100 corporates who would like to operate their manufacturing or operations on 100% renewables. So this platform will enabling the country with the unregulated energy system to have access to 100% renewable by trading the green attribute of the renewable energy. And this will translate into more and more like PPA for the corporates who would like to get direct access to the renewable energy as well. Another example in the venture building, we look at the trend on the electric vehicle costs, the drastic cost reduction on the battery side. And also we see that renewable energy is actually much cheaper than the traditional energy. And we create swap and go as the infrastructure, which can open up the economically viable, accessible for the consumer in Thailand. without this infrastructure and business model, the cost of the EV is much more expensive than the traditional ICE two-wheelers. And with this investment, I think we open up access to the riders and to the daily commute in the major cities in Thailand. And we can also enhance business model through the data collection, and we can foresee many upside on this infrastructure investment as well. We also work with other R&D or startups on the battery manufacturing side, for example. And by working through this flow of innovation, we know clearly like what could be the winner in the next generation of the battery or technology as well. And on the venture capital side, we set up the policy to cover the new energy, which is the core business of the PTT. And also we are looking at the more eco-friendly constituents of the manufacturing side, either sustainable material, either the better way of using the water or some other manufacturing activity that reduce loss in the process. And through this innovation flow through the VC investment, which can provide the corporate an unbiased signal, because it's not the company like us to think about what will happen, but the VC investment dictated by financial return will tell you what would be the next big thing, what would be the mainstream in the upcoming years. And through that lens, we can allocate more properly in terms of the budget on R&D, budget for M&A or corporate development that the company should grow. And this review a quick landscape that we see from the VC investment. We know how the future energy look like. We know roughly how many years the future of mobility will come into reality. And we also see many other opportunities on the AI robotics as well. This is one of the example. It's a Thai startup that we invested into. Back 3 years ago when we invested in the company, it's just a prototype robotics company. And 2 years passed, they have developed an AI solution with the autonomous drone for agricultural sectors. So this can reduce or improve, I think, 300 times productivity in the rice field. And they can improve the field management for the sugarcane industry as well by the farm management system. And from there, we develop and expand these robotics into more customer-facing operation. So we now start to do autonomous drone delivery services in the Wangshan area with the 5G and other infrastructure. And hopefully we can expand these services outside of the confined sandbox area. Another technology that we invest into is the innovative tracker for the solar projects. So it can save energy, it can save the time for the construction. On top of that, with this technology and design, it will reduce the land movement, the site preparation, which cause a lot of impact to the solar project development and save a lot of water contamination from the project as well. And we have started demonstration site in Rayong, and we are working towards expansion into the region. Last but not least, on the venture platform, we know that innovation or creating the new thing is not possible be done by one company or one person. So I think the best way is to create an ecosystem on the buy side, on the sell side, and on the technology provider side, to think about the regulation, to think about how would be best to transition from the status quo to the new scheme that everyone wants to be into. So we, aside from setting up the ecosystem outside, we also set up the process for the internal innovation as well. We have BU Buddy to think about help the operators who work on day-to-day to think about how to innovate and set out the guideline on how to do the agile transformation. Aside from that, we set up activity to embed the mindset to open up opportunities for the operator to work on more innovative projects. And I think we can talk about this later on if we have time, or if you have more questions to connect. But I think if you decide to do corporate investment and corporate innovation, this might be some tools for you to think about. And last, I think going back to the first question, like why your company need to do the SDG? So think about your true north, like where your company is trying to go. But for us, we like to build the better solution for the next generation. So thank you so much, and happy to connect offline if anyone want to talk about what we are doing.
Now, second half, before we dive into panel discussion on innovation for sustainability, how corporate impact venturing can support the SDGs. Like to chat with us, please feel free to submit via the function box on the right-hand side on the screen. Let's get started with the panel introductions. Our panelists will go into Mr. Brad Denick, Mr. Steve Fragovsky, Mr. David Karipur, Mr. Prem P.D. Ratagan, and the moderator of this section. Please welcome Ms. Suti Kotari, Head of Communication from AWR Lloyd. Please welcome.
Thank you. Thank you for the introduction, and thank you to all the panelists for those incredibly informative discussions on strategy and great discussions on strategy and great initiatives. Let's get this panel discussion started straight away. So I would like to focus on two things, which we can categorize as what and how. So what problems are most urgent and which can be tackled effectively by the private sector, and how. So David, I'd like to start with you. I'd like to ask you, what are the environmental, social, and technological issues most relevant to Thailand and the ASEAN community that can be addressed by the private sector? Also, which solutions do you think are most promising?
Thanks for the question. I think if you think about Thailand, the way that its economic model is set up, and you look at its sort of position within the region, I think there's a huge upside when you talk about, for example, automation. If you look at how we're going to take and sort of look at their manufacturing processes, their logistics processes, the way they do that, and how automation is going to come in and all the different pieces of that puzzle, whether it's robotics, artificial intelligence, all the different pieces that come into that. And in that process, when you start to talk about smart factories, greening supply chains, this is sort of really going to push the agenda on circular economy, what Brad was talking about earlier on. But you look at on how manufacturing and smart manufacturing can be a lot better. So the focus, shifting from smart cities to smart manufacturing, I think is a really interesting area to look at, to be much more competitive within the region and to maintain and build up its manufacturing base, but also importantly, its SME base. I think there's a huge potential for Thailand to be sort of the Germany of Asia in that sense, to really sort of build up. It is learn from the mistakes of Korea, learn from the mistakes of Malaysia and Singapore, and really sort of build up that SME base. But the other key component on that is education. I mean, really upskilling. The hunt for talent is on. There really is not enough talent in the world to really drive a lot of the new business models that we're seeing coming through. So developing that talent, I think, is really important. And that's going to have a multiplier effect on society, raising incomes, giving much more equitable as far as gender issues and everything else. I think that's really going to start to bring these things in there. So I'll stop there, but I think that's a really interesting area to go.
Thanks, David. I think that's a great point about education, especially. Prem, would you like to add to David's comments?
Yeah, I second David's comments, and I think education is one of the easiest way to implement in this region. I'd like to add on that I think one thing is the ability for the people in this region to connect to the greater world. Like we are 10 countries with like 7 or 9 languages, and I think by opening up the ability for these people to connect to the world through the internet or some other measures will allow them to have more job opportunities, able to do more commerce from the produce that they are making. either education or the AI translation would do that. And the second part, I think anything around enabling the trade or productivity from their produce or manufacturing would be easiest way to implement as well, given the price of the IoT that's very decrease very fast.
Thank you very much. I'd like to move on to the next question now. Ziv, for you, what do you think is the future of impact investing? That could be in terms of investment quantum, where the biggest opportunities are, trends, changes in impact measurement, and corporate reporting.
So, impact investing hasn't started now. I was, in 2014, I was lucky enough to be part of the first ever agri-tech in Southeast Asia, in Indonesia at least. And we talked about impact investing then, but then and now, the biggest, I'm trying to figure out which word to use. The biggest contradiction in impact investing is that impact investing has never allowed for less returns. So actually, ultimately, impact investment became, you have to achieve the same kind of return as regular investing, but you now have to actually also adhere to the kind of sustainability issues and whatnot. That was there 10 years ago. More importantly, what it means now is that it will still be there, and there will be just less and less of quote unquote unimpact investing. So, there's already been a lot of discussions about, do we invest in things that are coal and whatnot that are not good for the environment? And there'll be just more shift towards investing that are also environmentally right. So I don't see, I think there's, I don't see a big change other than the fact that everything will be important to have impact, because I think there is a consensus now that we have to do certain things to actually improve climate change, improve waste and whatnot, and that's where the world is going to.
Thank you. Brad, I'm curious, do you agree with Ziv on his ideas on the future of impact investing?
Sure, but I think what we'll see is a trajectory somewhat similar to ESG, right? That's been building for a long time, and we're in this kind of hockey stick period where it seems that all investment is supposed to be ESG oriented. Yet there's strong pushback against ESG at this particular moment for reasons that are related to what Ziv highlighted. ESG is very good in terms of metrics around reporting on your performance as is, right? Not necessarily benchmarked to planetary boundaries or aligned specifically with Paris Agreement. So I think what you'll see is that impact investing will follow a similar trajectory, because stakeholders, financial institutions, corporates will be under more pressure to go beyond reporting and disclosure into really having sustainability be at the core of what they are about, right? Investing with both feet into the future. And one thing that will enable that is kind of this 5 capitals type framework that folks talk about, which is, it's not just financial returns. And we've experienced this when we've worked with different institutions and corporates around SDG outcomes. So if you invest in a project, you get your financial return, but there are environmental benefits, there are social benefits. And if you quantify those as SDG outcomes, you would think, okay, now does that impact my return? To this point, impact investors always have to get market rate of returns, but also contribute all these other great benefits. Well, the day when we start valuing those, where we really quantify them and report them as SDG outcomes, that will act as an accelerant to impact investing, right? So I think that's probably the real key for this market to take off in a meaningful way.
Thanks, Brad. Prem, how does PTT feel about the future of impact investing?
I think people are now within the transition period. Like we work with other investors in the space as well, and in some innovative fund that we work with, we start to see the anchor LP to set the performance criteria for the fund manager or the GP to achieve both the financial return and their profit sharing or carry are linked to the impact criteria that the fund has to achieve. And from our perspective, like I mentioned earlier, we start to plug in carbon emission or some other aspect into the financial evaluation of each project. So I think we are at the starting point of the SDG investing, and through the funding that are coming into the sector, we can see the crossover of both performances in line.
Thank you for that. David, next question for you. For a company that wants to increase its strategic investment into impact themes relevant to its business and stakeholders, what are the pros or cons of the models you've laid out today? Well, all of you. One-off direct investments, setting up a CVC or corporate impact venture fund, investing into a separate PE fund?
I think when you start to look at impact, impact has a perspective. So, for example, if you look at affordable housing, a lot of the big development companies here in Thailand, if you look at affordable housing, for example, you may not get a return until your debt load comes down after 10, 15 years and you start getting a return. But affordable housing, you create a social impact right away. People can move in there, maybe they own their first home, they build up their equity and capital. That happens right away. So impact happens right away, where your investment return doesn't happen for 10 to 15 years. The opposite can happen too, where you get a financial return quickly. If you're doing automation, robotics, and manufacturing, you create cost efficiencies and you get that right away. But maybe the environmental impact takes a while before you start, recycling water, reusing solar energy, all these different types of things. So I think it's the same thing for a company right now, where they really have to look at, do they want to create positive impact? It's only in their favor. From a consumer investor policy perspective, it's only in their favor to follow that pathway. Now, are they going to do it in their vertical? Are they going to do it in a lateral vertical? You see this in, for example, energy. Energy has this bread and butter business, but to move into alternative energy, that's a side business that it can actually create and grow, and maybe that becomes the main business in the future. So you see there's a lot of different ways to bring it out together. Part of the biggest problem with corporates is because we're moving into a lot of brand new technologies, they simply do not have access, or nor do they understand. And I think this is one of the big issues that they've got to look at. Using artificial intelligence to create efficiencies in your corporate, that's interesting. Basing your corporate business model on analytics driven from artificial intelligence, that's totally different. And we see this with the internet. The internet, the startups, the venture capitalists made the money first. The corporates came in about 5 to 10 years later and started to leverage what they learned. And now the corporates rule the internet world. And this is going to be the same when we look to the future. So it is a very strategic decision to do it. Co-investment's an easy way to get in, because you actually work with the investor and you work with the startups at the same time, and you can sort of drive and help them, being a market maker. So I think it really depends on the corporate, how they want to build in, but there is a model, definitely, there is a model for every company out there to invest in the future and make positive impact.
That's great news, David. Thank you. Liv, would you like to add to that?
I agree with David. I think there's many different models, and it really depends. If I were to try and structure it a little bit, right, to add, if anything is in core, right, related to core, it needs to be built inside with leveraging of partnerships and whatnot, right? As you move away from core business, then this is where you should start, and you should start looking at whether it's venture building or investing. The difference between then venture building or investing is, are you in how closely you want what you are, the partnership to be, whether it's with the venture builder or the investment, to be tied to you strategically, right, in terms of that, because it goes well beyond return. So we find companies invest when they say, listen, I would like to be a customer. We find companies venture build when they say, I would like to have the optionality to actually become more than just a customer in the future, right? I think that is where we see, but I agree that there's so much innovation out there and there are so many problems to solve that a combined approach is probably always the best.
That makes a lot of sense. Thank you. I'd like to move on to our next question. Brad, if you could take this one. How measured does impact need to be for a corporate impact-oriented venture fund? And what tools are out there today to help us understand how a potential investment and business solution could contribute to various SDG targets?
Thank you. Yeah. So I think for a particular investment, its impact may be in one or two kind of key areas, right? And the impact that it needs to measure, hopefully, is quite obvious, and you don't need to go through some kind of rigorous impact measurement methodology. If you're running a fund or a unit to analyze impact, and impact is a priority, then certainly you need to be looking at different tools and methodologies that are very focused on quantifying impact. If we're sticking with the theme today, the Sustainable Development Goals and the 169 targets, then it's really important to quickly get away from some of the practice, which is, you know, the SDG logos are attractive and they're nice and we all have them. But just placing them next to existing businesses and business lines and activities is directionally helpful, but obviously you need to be digging down to each of the targets, right? So within, within goal 9, right? What are all the targets that are embedded within that? And what metrics do you have to show your performance against the baseline, right? That your investment in this company, its businesses, its products, its services, its success shows a quantifiable outcome against the baseline. So there are other methodologies, but again, sticking to the theme today, I think part of it is use the SDGs, but use them well by doing a deep dive into the targets, into the metrics, and then really systematizing it. Thanks.
Thank you, Brad. In the interest of time, I'm actually going to wrap this discussion up, but Brad, I'd like to ask you if you had one key outcome or one key message from this discussion for the audience, what would that be?
Just that sustainability has become core to strategy, right? It's not, myself and many of the others on the line here today spent their careers in sustainability, in climate change, and it's moved from different departments to where it is now, which should be at least at the CEO, board, strategy, finance, innovation, R&D. It should be central to corporate innovation. And increasingly it will be, if it's not already. So yeah, that's the main theme for me at least.
Thank you. Ziv, what would your key takeaway be?
That companies have a number of tools in their disposal. So the real question is to start exploring. I think the companies that will not explore any of these tools will face trouble as they will get disrupted as such. So the question is simply how do you as different companies start exploring, whether it's investing, whether it's partnering, whether it's building and whatnot. I think hopefully that's a discussion that, if not started already, will start today.
Thank you, Ziv. Prem, I'd like to turn to you for your key takeaway or your key message for the audience.
Me, I think two things. Now, sustainability become a right to operate in every context, in every part of the world. And now I think the sustainability is now quantifiable, and there are a bunch of tools that the company can think about and set their execution plan to achieve their aspiration in this part.
Thank you. David, last but not least.
Well, I think it's been clear that innovation has been a driver for market leadership over the last 20, 30 years. I think that's clear. And I think moving forward, sustainable innovation is going to be that driver for market leadership. Because if you look at the puzzle, consumer sentiment is shifting. Policy legislation is shifting. Investor sentiment is shifting. And businesses have a huge opportunity. This is the perfect wave, I guess. Huge opportunity to take that combination of sustainability, good for the world, good for people, and profitability, mix the two together. I think it's clear.
Thank you. Thank you to all four of you. Really informative discussion. And I'd like to hand back to TMA.
Thank you very much for an eye-opening session. And now we have come to an end of today's session. I would like to express appreciation to our supportive sponsor, Bangsa Corporation Public Company Limited, Better Grow Public Company Limited, Kasikorn Bank Public Company Limited, PTT Public Company Limited, Siam Commercial Bank Public Company Limited, SCG and Thai Oil Public Company Limited. And the last one, Bangkok Bank. Thank you for all supportive. We would appreciate if you would complete the evaluation and provide your feedback by clicking questionnaire button below. You will also receive a follow-up email with a link of today's presentation and a video record of today's webinar. On behalf of TMA, AWR Lloyd, and all the speakers, thank you very much for joining us today. We hope you found the information and discussion valuable. Hope to have a chance to welcome you again in Sustainability Forum 2021. Navigating the Uncertainty with ESG on 28 October. Thank you very much and have a nice day. Thank you. สวัสดีค่ะ